Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our resident uranium expert, Justin Huhn, who has a model portfolio that is up over 500% in 5 years. Justin, thank you for coming back on the show.
It's always a pleasure. Thanks, Steve.
Yes, I got my patented uranium tie back on, so we're keeping with tradition here. Got a lot of questions here. Go ahead and start out like we always do, and let's get your macro view of the uranium market today.
Sure. Well, it's been an interesting year. The year started out with sort of the tail end of a historically strong move for the commodity and the equities. That was into January and early February. Since then, we've had a long consolidation, both in the physical market and in the equities market. That consolidation period for the equities has been particularly frustrating, as we had a nice little move back in May, but since then it's been a very, very quiet summer, and the tail end of that pullback, of course, was a couple weeks back, coinciding with this Japanese yen carry trade unwind mini crash that happened across markets and affected uranium particularly bad. Part of the reason that was the news out of Kazakhstan that Kazatomprom was expecting a few more million pounds maybe of production this year, and the market interpreted that as bearish. And later that day, that yen carry unwind crash began. So the 3 days that we had of that liquidity crisis, everything got thrown out, and that marked a low, hopefully, just a few weeks back, 2.5 weeks back. And here we are. So we're starting to recover a bit in the equities, but the spot price is languishing as we continue to have a very, very quiet market, leading right up into the WNA Symposium that's happening next week in London, and into historically what's the strong season for uranium equities and for the physical market. But it's just been a very, very quiet market, physically speaking, for both spot and term, and we think that's going to change.
Okay, I'm going to share my screen here and we can visually see. We got a lot of new listeners here. And okay, so this is the spot price of uranium. I've arbitrarily drawn this bottom white line at $80, hoping by doing that it holds. But it seems to be working. I mean, we had a tick down below 79 or right around 79 for a hot minute. But one thing I've noticed as well is that the Sprott Physical Uranium Trust has traded at some massive discounts when you were talking about that yen carry trade unwinding. And intraday, I did the math and it got down to 18%. But there was a couple of days where it closed 14, 15, 12. We're back up. I think we're at a 3% discount. But did you see any opportunities back here? I mean, like if you're just playing the beta and you got URNJ, I mean, there was a hot minute in time where it just smoked down.
Yeah, everything, like I said, that the liquidity crisis that we experienced for just a few short days a few weeks ago was one of those everything opportunity kind of moments.
Yeah.
And the market doesn't give you those very often. But when it does, you want to take advantage of those, in my personal opinion. So as a fundamental investor, especially for this particular thesis, I'm long-term bullish, and nothing has changed that for me. So when the markets give me extreme discounts, I usually act on that opportunity, and I did. I got relatively aggressive, longer into multiple uranium equities and opportunities in on the option side of things, and that was Friday and Monday of that liquidity crash. So I put my money where my mouth is, and this is one of those things where SPUT has traded at a greater than 15% discount to NAV exactly 11 times since it took over UPC. 11 days where it's closed at a discount greater than 15%. And 2 of those were in the past 30 days. Every single time that SPUT has traded at a greater than 15% discount to NAV, and you have a couple of other things, extremely bad sentiment that's expressed across the various channels, and daily RSI for the ETFs and the large cap stocks in the uranium space falling below 30. Every single time, that has either marked the low of that pullback, like precisely, or we had one more low following that was maybe 3 to 5% lower. So low enough for me. Rick Rule would say, there's always a possibility these things go down further, but sometimes things are just cheap enough. So if you actually measure the equities, let's say URNM as a basket of equities against the spot price, the equities are historically cheap. They are not as cheap as the COVID crash, but almost. They're basically back to levels that right towards the beginning of the bull market, in my opinion, December 2020, which in one way is very frustrating. I mean, I don't think anybody would have expected we'd be at URA 26 with $80 uranium. So the underperformance is palpable. With that said, we have yet to experience the sort of frantic investing fervor that does happen in these resource shares during frenetic bull markets. And that is yet to happen. We think the main events for this market have yet to happen. That's much, much higher volume term contracting. That's big moves in the spot market. That's much higher volumes being traded in the ETFs and the large caps. We've had a couple of moments of that during this bull market, but we've got this gigantic cup and handle in URA. We think we've got years of alpha ahead of us in this sector. And like I said, the main event hasn't even happened yet, which is the resumption of a replacement rate term contracting cycle. And last year we had a decent volume in the term market. This year has been very, very quiet for reasons I can get into, but it will resume. It has to resume because there's only so many levers the utilities can pull. And once you understand what those levers are, you know that they will be forced back into the term market. That's already starting. It's very active currently. We're going to see more pound sign in the term market in the coming weeks and months. That, in our estimation, is going to kick off another leg up in terms of the price for uranium, and the equity should follow.
Yeah, I'm going to share my screen again here, and we can see that. So this is URNM divided by uranium, just like you're talking about. And that moment in time back here, the gift of the yen carry trade. I hope there's another one, honestly. Lining back up with back support back here, going back, what is that, 4 years? So equities historically cheap compared to the commodity itself. Moments like that are gifts, I believe.
Yeah, they're few and far between. And I kept thinking during those few days when things were really, really getting hurt. I mean, across asset classes, but uranium got particularly hurt. I just kept thinking back to the COVID crash. And, when you have great liquidity, you have sellers selling everything in an unbiased manner. That's when the really good quality stuff gets thrown out, like the baby with the bathwater. And that's where I think the opportunity lies. I don't think buying the tiny caps that are at multi-year lows during a crash is necessarily the smartest thing. It might be highly speculative. Maybe will pay off better in the long run. But when the really high quality stuff that's been outperforming for the last 2 years goes on a 30 to 40% sale, that's where I start to salivate.
Yeah, it reminded me as well of the COVID crash when oil went negative, and I remember my buddy and I were in front of the screen, never even left the screen until the market closed that day. That was awesome. Probably the best trade of my life. Okay, got a question here from Jeff. He says, will we see another traditional reactor built in the United States?
Yeah, I think so. I think there's news coming on that relatively soon. There's plenty of hints here and there, and we've had a few conversations with industry contacts that are hinting at the same. So more news to come on that. I believe what we're going to see within the next 6 to 12 months is some kind of announcement that has to do with a collaboration between builders. So that would be, let's say, independent contractors working with Westinghouse and multiple utilities working together. I think that's what we're going to see. New multiple AP1000s being set to be built in the United States at existing nuclear sites that already have permits for additional reactors. That's my prediction. How many? I don't know. But the fact that the United States is very highly likely to continue to build nuclear is an incredibly good sign. And we can't bank on it yet, but it's happening. I think it's going to happen. Yeah.
Okay, good. Now, from the time they get permitted and approved to the time it's completed, what's that time frame? Like 3 years or 5 or?
It really depends on how well we get our act together. So, for example, going back to Vogtle in Georgia, the most recent plant that was built, between units 3 and 4, unit 4 got constructed years faster and a much, much cheaper. So there was so much learned even between reactors 3 and 4 that if we have a lot of the same workers and contractors coming together for these new builds, and the industry can really work together to make it happen, it should happen significantly faster and cheaper than Vogtle. With that said, the Chinese are building so many right now, they really have it down. They're building them in 5 to 6 years. So the US is probably not going to hit that mark. But I think if we could come in under, let's say, 8 years would be a very, very good sign if that were to happen.
Okay. Yeah, we had a question on China. So as far as like safety in them building these things, I mean, these are highly, highly regulated, right? It's not like we're going to have an oops out there in China. That's not likely.
That's my understanding as well. You also have entities like the IAEA, which is the International Atomic Energy Agency, and they tend to be sort of like a watchdog globally for nuclear. There's international inspections on nuclear power plants. The Chinese, despite the fact that you might assume that their safety regulations might fall short of regulations in the West, they're not about to just willy-nilly build these things and have accidents all over the place. So while there may be certain breakdowns, there was a gosh, what was it, like some leaky piping at one of their reactors about 3 years ago, and the IAEA was there, the French were there assessing the situation. They took care of it. It wasn't a problem. With all of that said, not even just thinking about the Chinese, just generally speaking, there's always this idiosyncratic risk to this trade for a meltdown of some form to happen. And that's always been there. It's always possible. It's less and less likely. And I know that folks that work in the nuclear industry often use an illusion of the airline industry. Whenever there's a major crash, it's investigated, 6 ways from Sunday, and that gets the industry safer and safer and safer over time with every investigation to every accident that happens. And this is the same thing after Fukushima. The entire world did a gut check, despite the fact that nobody was killed by this accident. It wasn't good PR for the industry, right? So the whole world did a reassessment of their reactors, and all of the world's reactors got safer because of Fukushima. So that's not to say a meltdown is impossible, but what we're seeing right now in China and in various other countries around the world is not only a push for quote unquote clean energy, but a push for more energy in general. And I've kind of proffered this at various times that if there were to be an accident, let's say due to some fighting in Ukraine or in Russia, right? There's been fighting around these nuclear power plants, Zaporizhia, over and over and over. Now all 6 of those reactors are basically in cold shutdown. So the chance of another Chernobyl is literally zero. With all of that said, if something were to happen with these reactors, that would be terrible for sentiment, at least in the short term. The equities probably would sell off, at least in the short term. But do you think that China is going to stop building 10 reactors a year because of something like that? Probably not. So the core of the thesis has always been and will continue to be the disjunct between supply and demand, which appears to be growing. While supply will respond eventually, and eventually we'll have new large projects coming online, the long-term picture is incredible on a supply and demand fundamental case. So will a meltdown be good for the industry? No, of course not. And of course, it depends on where it would happen, the severity of that type of incident. So it would most certainly be a negative, at least for the short term. Would it be a thesis killer and we would actually see demand come offline like we did after Fukushima? It wasn't the accident that hurt the industry. That hurt it in the near term, and the stocks did poorly for a couple of weeks. Tried to start to bottom out. Then the news started to hit Japan's coming offline. 53, 54 reactors going to come offline in the next 12 months. 10% of the world's demand gone. That's what put the nail in the coffin for the bear market, was the demand destruction. So long term, things look brilliant. Is it possible that an accident could happen at any time? Of course, that's always a risk, and that's why you don't want to put all of your money into uranium stocks. You want to be diversified. You want to take on basic investing 101 capital protection measures. It's a very risky, volatile sector. There's your disclaimer. Put money at risk that you're willing to lose. With that said, if things work out in the way that we believe that they will, the upside is so great that the stocks hit above their weight. You don't have to have all your money in these things to have outsized performance for your across your portfolio, with a minority of your portfolio invested in this sector. So with great upside potential comes great volatility, and it's hard to get one without the other.
Yeah, that's why we love it.
Yeah, true.
I'm going to share my screen here. Let's move on to Kazakhstan and Kazatomprom. And I forget where I got this chart, so I don't know who to give credit, but this basically shows uranium production visualized in, and we can see this light blue here is Kazakhstan. So they've got, I don't know, a third of the planet's supply coming out of Kazakhstan and Kazatomprom. And then the next, we got Canada, Australia, and we're kind of getting into the weeds here. The US has almost nothing. And then let me share my screen here. This is from your latest email, updated uranium supply demand model. Can you describe this on the left here as it goes up? This is uranium supply divided by demand. And then these are the years going across here. Go ahead and tell us what we're looking at here on the chart.
Sure. So the x-axis is obviously time, and the background is the demand picture that you can see slowly rising. That I guess flesh color is the China reactor requirements. So that's China alone, but that's all reactor requirements combined. Now the actual source of this data is Cantor themselves. I'm sure that this is informed, even though they don't reference it, by the WNA's work, probably by the WNA fuel report, probably by UxC's uranium market outlook, which they put out every quarter. Guaranteed Cantor is digging into the supply and demand modeling of these entities, informing some of their reactor requirements and the supply side. So according to Cantor, which in my estimation over the years, their supply and demand modeling has been, it's been more bullish. It seems like they're making more assumptions on the demand side than the industry is generally. So whether or not they are, and I haven't seen the data that they are specifically using for this, and whether or not they're including SMR demand, for example, if they're assuming that all US reactors are going to get life extended, for example. These are the sort of things that skew the demand to the upside. So this graphic actually more closely represents the upper case coming from WNA's fuel report. So the WNA puts out a fuel report every 2 years. They put one out last year. And they do a lower case, a reference case, and an upper case. The reference case is, in their estimation, and the WNA, by the way, when they put out this report, they have, a dozen industry professionals in the investing side and the nuclear side that work together, both in the demand camp and the supply camp. So it's not just the WNA themselves. You actually have industry folks coming together and coming to some form of consensus on where they see supply and demand going out in the future. So it's a very, very well done report. The reference case is their estimation of what is most likely to transpire. The upper case is, will China actually reach their 150 gigawatts by 2035 goals? Will the world, largely the OECD countries and the number of these countries that signed these pledges at COP28 last year, saying they want to reach, they want to triple nuclear by 2050. Will the world move in that direction? Will SMRs get built anywhere near the numbers that are being thrown around, et cetera, et cetera? Will US fleet get life extended? Will some of the UK and French fleet get life extended? Will the French actually build 14 new EPR2s? All of these things are baked into that upper scenario, right? So this more closely resembles an upper scenario. It also is showing, you can see supply really responds in 2029. So primarily that's, the big green bar is Rook 1. The dark gray is other new mines planned. So that would be, let's say, Global Atomic's DASA, Denison's Phoenix, et cetera, et cetera. So these are some of the larger greenfield mines. So these are all green, all three of these are greenfield mines, which obviously are having trouble coming online, especially Global Atomic's DASA with the problems in Niger. But when these do come online, according to Cantor, even in a best case scenario, they're not matching off annual demand in their estimation. So our modeling shows that supply gets closer to balancing for a point in time when you have Rook 1, Phoenix, DASA, Kazakh expansion, Uzbek expansion. When all of these things happen, I should say if all of these things happen, but if and when all of these things happen, our modeling shows we have a point in time where it balances off, but it really quickly, within about 2 years of that balance point, it starts to do this again
Is
because we
that
have a
year
lot of
2029 kind of close on
exactly.
here? Okay.
Exactly, yeah. And Rook 1, it's got that high, according to their feasibility study, 28, 29 million pounds a year. That's only for 5 years. Then it starts to diminish relatively quickly. Phoenix is also a relatively short-lived mine in terms of the larger amount produced on an annual basis. And at the same time, you have legacy mines declining in production. So you have Cigar Phase 1 phasing out about 2028. They're going to go into Phase 2, which our estimation is going to be a little bit more difficult, a little bit more costly to produce. And maybe they'll be able to continue on 18 million pounds a year. That's their plan. I don't know. You have many Kazakh mines declining in production starting in the early 2030s. So these are existing mines that are currently producing, 3, 4, 5, 6, 7, 8 million pounds a year that really start to drop off in the 2030s. So decline rates in production from existing mines really starts to hit just after this point in time where maybe the market balances. So it really is more important to show kind of the long term that we've got a serious situation here without much more supply coming online. And in the meantime, between now and Rook 1, Phoenix, Dasa, Kazakh ramp, we've got this black hole of supply with very easy to model demand. And so we know that utility demand is coming and is here, and every single life extension kind of adds to that.
Okay, and as far as Kazakhstan or Kazatomprom, so they cut their forward guidance by 17% or 15%. So the biggest producer on the planet it got a haircut by almost a fifth. Is that right?
Well, their production is still increasing, but the guidance got a huge haircut.
Okay.
So, for example, last August, they were still telling the market that they expected to produce at 100% of their subsoil use agreements, which these are basically their production permits, and they're allowed to go 20% below or 20% greater than these agreed upon levels of production for each project. 100% of the subsoil use for 2025 was 30.5 to 31.5 thousand tons, or about 80 million pounds of uranium. That's what they told the market 1 year ago that they would be producing next year. Now they called that into question back in January. I'm sure you remember the equities had a big rally and the spot price continued to run from the 90s into $106. But as time has gone on, there's been less and less assumptions that they would be able to hit those marks, and they confirmed that in their first half financials that came out early Friday morning last week, and their guidance for next year. So the guidance for next year, they revised way down. They're expecting 26 to 27.5 thousand tons. It's a 15 to 20% drop in their previous guidance for 2025. And they are now saying they don't expect to come near 100% subsoil until and unless they have way more sulfuric acid likely coming from the plant they are building right now, which they expect will be operational in 2027. So importantly, they are also trying to revise down their subsoil use agreements in a couple of their projects. One of those is their big flagship Budenovskoye. This is these deposits, the 6 and 7 deposits of Budenovskoye, is a joint venture with Rosatom. That got the biggest haircut in guidance. So production from there is taking longer. It's costing more. They don't have enough acid. They don't have enough drill rigs. It's just going more slowly. And also there were a couple of other joint ventures, one in particular, a Japanese joint venture, the APEC LP, that is being revised down by 20%. They're revising down their subsoil use agreement targets. So what that means is they have that subsoil use at 100% is 1,000 tons per year. They want to revise that down to 800 tons. So that's a 20% reduction in their subsoil use agreements. And they wouldn't be doing that if they didn't believe that they needed to do that. So they have to maintain that 20% below in order to maintain those permits. They can be renegotiated. It's not like the state of Kazakhstan with the state-owned company is going to yank the permits, but they have to renegotiate them if they can't hit those targets. So they're voluntarily coming out and saying, we're not going to hit our previous guidance. We're not even going to come close to it. And we're going to revise down our subsoil use agreements for these two major projects, in addition to some others they called into question in terms of being able to hit their production targets. So on balance, what they're telling the market is they're not going to be the big supply savior that the market was expecting. Additionally, you can see in their financials that projects, the joint venture projects with Cameco, with the French, the Japanese JV, these are either flat or down in production, and the Russian and Chinese joint ventures are flat or up in production. So there's being a prioritization of sulfuric acid and potentially of other elements, whether that's supply chain materials or whether that's skilled labor or drill rigs, whatever, they're being prioritized to the east. And this should be a major, major signal to the west. I think that it is. And again, most importantly, the bear thesis from all the way back when I was looking at this sector for the first time, the bear thesis is and was Kazakhstan can just open the taps bull market over. So what happened on Friday was a very big signal to the market. That is not going to happen. That's the big takeaway. Yes, they will be able to marginally increase their production. Yes, anyone who has built supply and demand modeling is modeling for an increase in production out of Kazakhstan. No surprise, they're going to continue to be able to produce a little bit more, a little bit more, a little bit more. They're swimming in cash. They got to put that cash somewhere, whether it's a special dividend or they put it in the ground, or maybe both. But they need to spend that cash, and they're going to do it. So they will increase production. Don't be afraid. But they're telling the market they just can't do it quickly, and it's not going to happen as soon as everybody was expecting. And that's very important for investors and utilities.
Okay. Not great for the planet's energy demand, but fantastic if you own uranium.
For sure. And more, I think the other thing that this update really made more clear than ever, not only in the prioritization of sulfuric acid and the increasing production out of Chinese and Russian projects, but more and more pounds are going to be sold to China. So more than half of Kazatomprom on an attributable basis of their production is already being sold to China. But China is going to continue to consume more and more and more of a percentage of the uranium out of Kazakhstan, more and more and more. Russia, same. Russia has a lot of conversion enrichment, not a lot of uranium. This mine number 6, they've been developing for 10 years. Every 2 years, they come out and say it's going to be 2 more years. They don't have a lot of domestic uranium production. Their best projects, by far, are their JVs in Kazakhstan. They're the biggest joint venture partner in Kazakhstan. So Russia, with an announced over like 2 weeks ago, they announced they're going to be building 11 reactors domestically in Russia, in addition to the 18 that they're building as exports right now. China had 11 reactor approvals in a single day about 10 days ago, and they are on pace right now, currently on pace to actually hit that 150 gigawatts by 2035. So that's not just wishful thinking. They're actually doing it. And it's huge. It's huge on the demand side to see that happening.
Nice. Okay, so last time we talked, we were talking about the Russian ban and the waivers, and utilities were basically scrambling. They weren't going into the spot market to buy uranium. They were getting all their paperwork together to make sure that they could still get Russian conversion uranium delivered in the next 3 years or so, because that, maybe they got contracts signed at 40 or 50 or 60 bucks a pound instead of 80, what it is right now. Where are we in that process? That since that deadline is up, what's it look like going forward? Have any of them been approved or denied? What have you seen there?
There's been a single set of waivers approved so far that was granted to Centrus as the domestic enricher on behalf of multiple utilities. So Centrus was basically the broker, and the waivers that were granted, a few utilities were able to make the case to the DOE that these deliveries were paramount to their operations. So there is some clarity that has been improving around this process, but the process is ongoing. One thing that is now happening for the process that U.S. utilities are having to prove is not only their needs for that enriched uranium on the time frame of whatever future delivery they're trying to get a waiver for, but they have to now additionally prove to the DOE that they didn't buy enrichment from another entity to cover the potential of that enrichment being cut off from Russia. So they have to actually show their order book to the DOE and prove that they 100% need this material and they don't have any other options. So it's difficult for them to get these waivers. And we think maybe there'll be another round of waivers in the near term, but that process is going to be harder and harder. And we don't think it's going to be, they're not going to just be throwing them out like candy. And when I was at World Nuclear Fuel Market back in June, our understanding, talking with a few people that were close to DC, were that the waivers were going to be an easier process, that DOE played hardball with the utilities at the time that they were pushing the legislation to be passed and saying, sorry, guys, I don't care how much you have to pay. You're going to have to pay it. You're not going to get this stuff. Then when it finally did become law, they're actually working with utilities that can demonstrate that it's necessary. So the DOE doesn't want a utility to have to shut their reactor down because they can't get the fuel rods in time. That's, of course, the #1 priority. But they also don't want to just be handing them out willy-nilly. So somewhere in the middle is where we're at. It still is holding up certain U.S. utilities. So there's still a little bit of confusion around this process. Also with things that are like this complicates things to a much, much greater degree than most people understand. And any sort of uncertainty in the physical market really sets utilities to the sidelines. Excuse me. So for example, there are European utilities that have fuel fabrication contracts with Framatome in the United States and have contracted deliveries of Russian uranium to the United States to be fabricated here and sent back to Europe. And those shipments are being complicated by this legislation, even though it's not affecting a U.S. utility at all. Just the material, just the single ship that can carry this stuff. This is all throwing sand in the gears of what 5 years ago was a well-oiled machine where the utilities could get whatever they wanted from wherever they wanted. So all of these things not only have an upward pressure on the price and added bifurcation in the physical market, but they also give utilities pause and force them to step back. And that is what has happened a lot this year so far. That clarity is improving. That consolidation period we believe, is coming to an end very shortly here. And the utilities are starting to get more active. There's many more RFPs in the term market right now. Pounds are being signed incrementally, a lot of conversations happening. And we even saw utilities step into the spot market yesterday and towards the end of last week. Yesterday in particular, we had 2 traders come in offering up a little bit more pounds in the high 70s. Utilities stepped in to buy it. And so the activity is slowly coming around. WNA is a big deal. This is not just a catalyst that investors are clinging to as their last hope. This is an industry event. This is where utilities come together from around the world and communicate with each other, with traders, and with producers. It's a very, very large event. Term contracts are done through conversations. It's not like you go to Amazon and click buy it now. You actually pick up the phone or physically go and meet with people and discuss, how much can you give me at what cost? We spoke with a rep from a US uranium producer recently who was at a one-day conference in DC last month, and he had US utilities approach him, and he said that he could have sold the next 10 years of his production to one utility if he wanted to. He didn't choose to do it. In fact, he didn't sell any that day. But at these current prices, mid-80s floors, ceilings at 120, 130, could have sold every pound that he could produce in the next 10 years at that price. So the interest is there. The conversations are happening. Every lever that's been able to be pulled in the last 2 years, those levers are slowly running out of depth, let's say. They're going to have to come back to the table, and that process is starting now, and it's going to drastically accelerate over the next year or two.
Okay, so last time we talked, I think you said utilities have purchased about 30 million pounds of uranium so far this year. Annual demand is something like 180 to 200. Where are we at now?
You know what? Let me bring this up. I didn't look yesterday at the numbers that were printed. Let me tell you right now. Give me
Oh,
one
okay.
quick second. Term contracting volume year to date, 42.5 million pounds. So there was about 10 million pounds signed in the last 2 weeks. That's a good
Okay.
sign.
Okay.
So we're getting there. We're getting
Okay.
there.
Okay. Yeah, it's coming in. All right.
Yep.
Good. Yeah, and if they got to do 180 or 200 by the end of the year, there should be some serious volume coming in, I would imagine.
For sure. And UXC raised their long-term price to $80. I think Trading Tech is at 82. So that term price just keeps climbing, keeps climbing. Despite the low volumes this year, it keeps moving up, which is very, very good sign.
All righty. Owen wants to know, what does Justin think about Niger? Does he think they will still get into production this cycle, or will conditions worsen?
I think it's going to happen. Yeah. Yeah. DAS is going to be a mine. It's going to be a mine. Highest grade deposit in all of Africa. How it becomes a mine is a bigger question. So there's still concerns in the country because the French have still not been able to export uranium. They were trying to get approval to export it by aircraft, and the country is not responding to that request. So they've been unable to ship material across the border via traditional means. So Samina effectively is kind of halted. Excuse me, Somer is kind of halted. The production has continued on and off since the coup, but they've been unable to actually export the material. Now, that's the French, and the Nigerians don't seem to be in favor of the French at the moment for possibly obvious reasons. But the country expressed support, written support that made it ultra clear for Global Atomic and the DASA project. That the stock had a good reaction to that on the day it happened, but they still need to get financed, and the financing is probably still going to be a challenge unless and until we see evidence that exporting uranium is going to be possible. We have expressed commitment from the government to support the project, so that's there. Still, you don't really get the warm and fuzzies when you think about the political situation in Niger. So hard to say how they get over the line, but we believe that they will.
Okay, that's got to be a lot more expensive to fly it out by air than just on a truck.
I imagine it is.
Yeah, this stuff is not light.
No, no.
Airplanes have a payload maximum. Okay. Derek wants to know, he says, 18 reactors coming online by my calculation, December 31st, 2025. How realistic is this? And have all these reactors already purchased the roughly million pounds each needed to start them?
For sure. The utilities that have reactors coming online usually cover their fuel significantly ahead of time. So if these 18 reactors that are set to come online in that ballpark of the next, let's say 16, 18 months, certainly have the fuel already. Yeah, when you have usually the fuel procurement, because it takes around 18 to 24 months to go through the fuel cycle, you'll actually see the fuel needs met usually a couple of years, 2-3 years before the reactor is actually going to first come online. So those fuel needs are most certainly met. It's the life extensions that really have that near-term demand, and especially if the life extension is unexpected and sort of close to the set closure date. And big example of that was PG&E's Diablo Canyon. Right. They got that extension granted like 18 months before it was supposed to shut down, or 24 months before it was supposed to shut down. So they came to the market immediately as soon as they knew that was going to happen. But yeah, no, the reactors coming online, these are all big reactors. So we still have closures happening in certain places, right? We've got closures happening in Spain. They're probably going to stick to that because it's ideologically driven. We've got closures, a couple happening in Belgium, Taiwan. Interestingly enough, shut down their last reactor, and then like a week after that news came out, they basically said that they had to turn down prospects for building a data center because they didn't have enough electricity. And I posted that on X and I said, insert, stick in spokes meme is like the guy on a bike that shoves the stick into his own wheel and then falls over. So we're still going to have those closures happening, but on balance, the closures are smaller reactors, and the new reactors coming online are much, much bigger. These things are monstrous, 1,000 to 1,400 megawatts, sometimes larger. So yeah, there's a huge wave of demand that's set to come online in the coming years.
What was that? I remember that tweet. I threw out another spoke or stick in the spokes to respond to it. Was that thing just too old and they had to take it offline, or is this some political
Political.
clown world that? Okay.
Yeah. No, it certainly could have been life extended. I don't know the specifics on that reactor in terms of what it would have needed in terms of refurbishments or maintenance, things like that. Usually there's elements of maintenance that need to happen for life extensions, or you have to prove to the regulator that it's safe, sufficiently safe to continue to operate. But it certainly could have been extended for sure.
Okay. All right. And let's see. David wants to know. He said, "Why are both the spot and term markets so quiet?"
That's a really, really good question, an important question. So the spot market, look, it's always quiet relative to the term market in terms of volume. With that said, July of this year was the quietest, the lowest volume traded in the spot market in more than 10 years. It was the slowest month in more than 10 years. So the spot market has been quiet primarily because utilities have not been that active in the spot market. They understand how thin it is. Small amounts of utility demand in the spot market can move the price up, and the pricing of their term contract deliveries are always at least partially referenced to the market. So to the extent that a utility demand in the spot market is going to move the price up, they generally are doing what they can to avoid the spot market in order to not push the price up and affect term market deliveries. With that said, there is some utility demand in the spot market, but most of it is in the term market. The real story is the term market, and the reasons it has been quiet are basically that we had a huge move in the price last year. We went from $50 to 106 in like 7 months. It's an absolutely gigantic price move. It is one that nobody in the industry expected. UXC, Trade Tech, none of the analysts, nobody that had the utility fuel buyers in their ear was telling them, hey guys, watch out, the price is about to double. Like, this was an industry shocking move. And when this happens, and you are a utility that has future demand to cover off, and all of them do, except for any utility that has an expectation of a closure going forward, they all have some future demand, whether that's 5 years out or 2 years out or 10 years out, it's there. If you have demand that you need to cover off, but the price has just doubled, you're going to step back and you're going to see and wait where it's going. You're going to wait and see where it's going to settle out, right? So, okay, that got crazy really quick. I'm going to step back and chill. Got a little bit of inventory. I'm going to pull all the levers that I can to avoid coming into the market. And let's see where this settles out. So with that said, where it settled out is $80. Where was it last year? 50. So an incredibly, incredibly higher low with minimal demand is a very, very important tell. So when demand almost disappears and the price doesn't crash back down to where it was, that means you have an undersupplied market. And that means you have a market that understands that undersupply. And the players in the market, the traders, the analysts to some extent, the price reporters showing 80, 82 term, that's where these deals are getting done. Even if they're low volume, utilities are paying this price. So they stepped out of the market largely because they had a huge, huge price move, wanted to set back, see where it settled out. 2, the Russian legislation has been a big reason for lower volumes being signed, especially in the US, both last year and this year. So the US utilities have been highly reliant on Russian enrichment, right? 25% of their annual demand, and it's the biggest market in the world. So what the US does tends to affect the overall global market. So even before the legislation was passed, there was a concern that there would be legislation or an executive order or a cutting off of material by Russia. All of these concerns were swimming around. And what the utilities did last year was they did not sign a lot of new contracts, especially with Russia. So there's been a couple of utilities, but largely US utilities have avoided new business. But what they have done is contract deliveries for enriched uranium that were for this year or 2025, 2026, they elected to request to have that material shipped to them sooner. So they pulled forward a lot of that material from Russia. So last year we had record amount of Russian uranium come into the US. And that is not because they did a bunch of new business buying spotty UP, but because they had legacy contracts with the Russians that they decided to pull that material forward and get it while they could before maybe it was blocked from some means or another. So that gave them a little bit of buffer. In Q4 of last year, one utility bought a little bit of Chinese enrichment with a big fat tariff on it. They did that to shore up because why? The legislation just passed the House in November. So they said, shoot, I'm going to make sure I'm covered. So anybody that's talking this enrichment ban doesn't matter, they're still just going to buy it from China. Look what happened last year. Last year was a single utility that bought 13 to 15 reloads. You know how much uranium that is? Less than 1 million pounds. All right. So this is not a flooding of Chinese enrichment in the United States, and it didn't happen, and it's not going to happen. But that was one lever that they did pull in small volumes, pulling forward material, sitting on the little inventory that they had, a little bit more than 2 years. So the industry, the commercial inventories in the US jumped a decent amount last year, largely because material was brought into the US by converters and enrichers because of this ban legislation. The utility inventories rose a little bit, not that much, just over 2 years on average. Lastly, they have been able to pull forward and flex up, not pull forward, but flex up on legacy contracts. So contracts with Cameco, with Orano, with Uranium One, with various traders, with BHP, whoever it might be. A lot of these term contracts during the buyer's market of the late 2010s into maybe 2020-ish had flex provisions where the supplier offered to the buyer the opportunity to request to receive more or less, sometimes up to 20% more or less, than the dictated amount in that contract at the time of delivery. So if you're a utility and you have a contract that you signed in 2019 for 2024 delivery, which a lot of utilities had that, right? 2030 is now in the nuclear market. So the deliveries that are happening now were contracts that were signed 2, 3, 4, 5, 6, 7, 8 years ago. And if you have a contract signed, let's say 5 years ago, that was signed at $40 fixed, and that was maybe 50% of the contract, 50% is referenced to the market, $40 fixed is half the price of what you can pay in the spot market right now. So if you're a utility, you're going to flex up all day long. And they all have done this with every contract that had that provision in it. So flexing up, pulling forward material, and then sitting on that slight buffer that they were able to build through those two means and levers that they were able to pull. They were able to step back during a historic price move in the market and to see where it's settling out. So all of that is to say, flex provisions will only last for so long. It's a buyer's market. It's a buyer's market element. We are now in a seller's market. So, and we have been in a seller's market for the past 2 years. The contracts that are being signed 2023, 2022, 2024, and now going into the future largely don't have flex provisions. So those are going to slowly roll off. And as far as pulling forward Russian material, that was a one-off. It's illegal in 2028. Maybe we'll see a couple more waivers, maybe not. It's not that big of a deal if we do, okay? So the pulling forward material, the flexing up, the drawing down of inventories, Kazakhstan, Kazatomprom, in their update, they're at 10-year lows in their inventories. So inventories have been drawn down by producers or for producers by utilities. All of these things have allowed utilities to contract in lower volume. All of these things are slowly coming to an end. There's not that many options left and levers left to pull besides literally coming to a producer and signing term contracts. And that's what we're starting to see, what we're going to see going forward.
Okay, awesome. That answered Patrick, Derek, and Lynn's question all in one go. Oh, one last one here. I thought this was a good one. Frank wants to know, any news from Askar, how do I pronounce his last name?
Batyrbayev. Unfortunately, no. Hopefully he's doing okay, but no news of late.
Okay, yeah. I wonder, do you know what happened there? Why did they arrest him? What?
Oh gosh, what were the charges? Um, it was something along the lines of like a corruption charge, or so. I think that the charges had something to do with like illegal sales activity. I don't even know what that means. It was very vague, so I don't really have any great information on that situation, but hopefully we'll hear more. There's some of his colleagues we'll be meeting up with at WNA, so hopefully we'll hear that he's doing all right. Yeah.
Okay, okay. I really look forward to you coming back from the WNA. I'd like to be one of the first to interview you when you do.
Let's do it.
Justin, always a pleasure. Any final thoughts? If someone wants to sign up for Uranium Insider, what can they expect when they sign up for your service?
They can expect a focused attention on this market. We have a small team that's dedicated to covering uranium and uranium only. So we spend a lot of time in the physical market. This largely contributes to our conviction on this trade, which helps a lot during periods of waterfall declines like we experienced a few weeks back. Personally helps with the conviction for adding to positions and having conviction for going long during a period when the trading is very frustrating, to say the least. But we're pretty pumped on what's about to happen. There's really only so many things that utilities can do to avoid that term market, and all of those options are running out. So looking forward to WNA. I think there's going to be some good information. I'll of course be doing daily or almost daily updates to the membership while I am in London, giving them the straight stuff right as it happens. So that's a nice benefit for members. But yeah, we cover this market and this market only, and the most feedback that we get from our membership, which by the way, we have an incredibly high renewal rate, which I'm super proud of, and it's unheard of renewal rate for membership businesses. But what we hear most from our members is that when the sector inevitably rallies, which it does a couple times a year, usually, at least, even if it's a short-term rally, but I think we're on the cusp of a longer-term, much larger rally, is people thanking us for keeping them in. So adding to their conviction and keeping them from capitulating, because when you see your portfolio declining in value during these pullbacks, it's not an easy feeling, and it's not an easy feeling for the most tried and true and weathered investors, right? But it's very difficult to trade against your gut instincts and your emotions. And if you just go back and look at any sector you've been invested in for more than a few years, go back to the points in time where the sector was rallying and the sector was selling off, and try to recall how you were feeling at that moment. And like my partner Rick is basically saying, like, when you feel like you want to vomit, buy, right? That's basically it. And it's so hard to do. It's so hard to do. And it's so understanding. Like I feel it. It doesn't feel good to see red on the screen. But if you're fundamentally convicted about something for the long term, you have to buy when it's bloody. That's what you should be doing if you're holding something and wanting to be investing in something for the long term, for an expected multi-year bull market, for something cyclical. And this is the beauty of cyclical investments that commodities are. So once they start going and the cycle is in place, it usually stays in place for a very long period of time. And uranium is one of the longest cycles. Now, we had a big price spike in the previous market, but barring that spike, that was a bull market that went until basically Fukushima. We had a lot of pounds get sold in the market during the GFC. But really, the price started to recover, what, in 03, 02, and went all the way to 2011. And there was a spike in the middle of that, but it was almost a 10-year bull market for the commodity. So these things last a very, very long time, especially when the underlying demand factors are there, and they are there. The reactor, I don't know how often you look at the WNA page that shows global reactors under construction, but the number of reactors under construction continues to climb. A couple of years back, it was in the high 40s. I think it's 60 or 61 right now under construction. So this isn't just COP28 projections and people just saying what they believe the audience wants to hear because it looks good for their constituency who wants them to do something about the quote unquote climate calamity. It actually is happening. The reactors are being built. And that's very important as an investor to look at what is happening, not just what's being said. And what is happening is reactors are being built much, much faster than they have been over the past few decades. And that's a very good sign. So final thoughts, hang in there. Don't worry. Nothing is broken on the overall fundamental investing case for the long term for uranium. We think we're about to see a very, very nice move to end the year. So hang in there and trade against your emotions, always.
Yes, and just to reiterate, this is forecast demand, and that's the supply, which is a contrarian's absolute dream. Justin,
Absolutely.
Thank you very much for coming back on the show. If you guys want to sign up for his service, there is a link in the pinned comment below. It's an affiliate link. Justin has given a little bit back to the show, and it doesn't cost you an extra dime, so thank you in advance for using that link. Justin, you have a wonderful rest of the day, sir. I wish you all the luck at the WNA. Learn all you can and come back and report.
Thank you, sir. I will do. Happy to do it.
Yes, and thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.